Good morning, everyone. It's Friday and it's the end of the week, but we have a really special show today based on clients calling in. It is going to be a game changer. Today, we're talking about mortgage modification scams. Mortgage modification scams. Did you know that there are companies out there that are preying on individuals when they're about to lose their homes? Inflation is running rampant right now. Groceries are 25% more than they were pre-pandemic. Gasoline is higher. Everything is higher. Interest rates are higher. The average interest rate for credit cards around 15%. Now it's over 21% for the average credit card rate. And credit card delinquencies, auto loan delinquencies, and mortgage delinquencies are on the rise. So folks, beware. If you get in trouble with your mortgage, I'm going to tell you right now, you need to call the P.I.L.L method. We're going to put the number out there for you. We're going to put it out there several times today. Call 256-886-1867, 256-886-1867. If you are already in a mortgage modification and it looks wrong, if you're thinking about it and you're not quite sure, and if you're on the verge of getting in trouble, you need to call us. Even if you're not in trouble, you need to call us because the information that we have is real. Handle your mortgage from a position of strength and knowing. Today, we're going to be talking about mortgage modification scams. You want to fasten your seatbelt and get ready to go. So are you ready? Mortgage modification scams right now. Okay, folks, I'm telling you, I have talked to people when it comes to their mortgages. I have seen where people have signed up to save their homes to get a mortgage modification. And here's how it is supposed to work. You can go to your bank, and if they have a mortgage modification program, and most of them do for your bank or your mortgage company, and if you can prove that you're under stress, then you can get your loan modified. You can get a lower interest rate and a lower payment. But here is how they do the lower payment. How do you get a lower payment on a mortgage? It's not just getting a lower interest rate. Most of you who have a modification received a 40-year mortgage instead. A 40-year mortgage. Now, if you heard me on my show before, I like 40-year mortgages, but most people don't know how to deal with them. Let me show you something right now. Okay, we're going to put something on the screen. Here we go. All right, and then we'll get into the other things. So I want to show you a little bit about a 40-year mortgage. So if you've got your loan modified, most people don't know that when they got their loan modified, you received 3 trial payments. 3 trial payments. Okay. And then with those trial payments, when those 3 payments were completed and you made them on time and in full, then your modification was set in stone. You are all ready to go. Some of them have a lower interest rate. Some of them have a temporary lower interest rate, and then it's over a number of years, the interest rate will increase. Some of them, and most of them, to lower the payment, had to give you a 40 to 45 year mortgage amortization. And I want you to know today, okay, that it's not the number of years that matters. It's how much you owe. And when you know how much you owe in the P.I.L.L method, you can alter how many years you pay that. Let me tell you something. If you have the income, a 45-year mortgage in the P.I.L.L method pays off in about 7 years. A 30-year mortgage pays off in about 7 years, because we're looking at how much you owe, not for how long you owe it. If you look at this, it begins to make sense. Now, I'm going to tell you something about when it comes to understanding mortgages. P.I.L.L method stands for prepayment of principal, isolating the principal amount, leverage, and liquidity. When you understand how that works, you know what to focus on and what to look at. So we're going to put in here, let's just put in a $200,000 mortgage, and we're going to put it in at 6%. There you go. And there we go. The payment is $1199.10. $1199.10. So let's just say that this person needs a loan modification. All right, they need their loan. The interest rate is a little too high for them. Something happened in the family. They can't afford the payment anymore, and so they go to their bank and they says, "Listen, I need a lower payment." Let me show you something. They're at 6% now. Okay, they're at 6% now. $1199.10. They need a lower payment. Let me show you what 4% actually does. Oh, no. I don't want to do that. I want to keep this one. Okay, we want to keep it at 6. This is our 6% loan. There we go. And then we're going to duplicate the tab, and we're going to put in a 4% loan. Okay, got a 4% loan now. It goes from, I forgot to take the payment out. Going too fast here. I get too excited. All right, there it is. Here's your new payment. $954.83. $954.83. Okay, that is the new payment versus $1199.10. Yeah, it's a little better. Okay, it's a little better by lowering the interest rate. But you know what makes the big difference? What makes the big difference is taking what you owe and dividing it by a new number, giving you a 40-year mortgage. And people are desperate to hang on to their homes, so they'll sign almost anything. Let me show you. Well, good morning, Brian. How are you? All right. Listen, all you people that are listening, go ahead and say good morning. All right. I'll listen. I forgot. I'm so excited to get into this. I forgot to say good morning to everybody. So let me put it in the chat here. Good morning. All right. There. Good morning, everybody. Tell us where you're from. All right. And if you know anyone with a mortgage modification, get a hold of them so they can understand. Okay. Thank you, Brian. He says, all right. He enjoys our show. Okay. Watch this. So we got a 4%. We're going to change this to 480 payments. Okay. So let me see here. We're going to do it to a 40-year loan. So let me show you here. We're going to bring up our calculator. All right. That's 40. All right. Times 12 months. 40 years. Oops. Okay, 480 months. That's for sure. 480. That way you can see it. Now we go from 954.83 to 835.88. Okay, now we've got this payment here. All right. It's $1199.10. And their new payment is $835.88. Now, by the time people call the P.I.L.L method, by the time they give us a call, and I'll put the number out there again. Brian's from South Carolina. Good morning to you, sir. All right. By the time people call us, they're doing a little bit better financially. And then they find out that they can pay off their mortgage in about 7 to 9 years using our program. All right. And by knowing that, they're calling us and then they give us their financial information. And that's when they find out. Most of the people who have a modification find out that they have a 40-year amortization and they did not know it at the time. They thought they were getting this lower interest rate and this was what was doing the work, but it was never clear to them that they were signing a document that put them in a 40-year loan. Okay. So now we're going to get to the point where we're going to show you that you don't have to worry about a 40-year loan. In fact, I like 40-year loans. If I could get a 40-year or 45-year loan for everybody, I would, because it doesn't matter how long you have to pay the loan. What matters is how much you owe, and that doesn't change. In fact, getting a 45-year loan or a 40-year loan actually makes it easier to pay the loan off cheaper and faster. You can be more efficient at a higher interest rate. You can be more efficient at a higher amortization, higher term, if you know how to read an amortization schedule. And I'll show you this right now. Here is at 6%. Here is the that's the principal payment. $200. All right. 201, 202. When you increase the term, look at this. The principal payment is 169, 169, 170, 170. And we'll say, well, Don, the interest over here starts out at 666. It's still, the interest is still hefty. Okay. The interest is still hefty. I mean, look at the small principal payment. You mean I'm paying my loan down with these $170 payments? Yes. But when you prepay, you're attacking it with lower principal payments, and interest payments you skip don't matter. So if I were to watch this, I could give the bank here prepay $2,068.20. I could prepay that and knock off a year's worth of principal payments, of mortgage payments, and save almost $8,000. And my next payment is on line 13. Okay, that would be for the next month. At here, look here. It takes $2,456 prepaid. All right, at the 30-year loan. Okay, 2456.01. And I'm going to show you another thing. If you can get a modification, you may want to keep your higher interest rate. Why is that? Okay, let me show you something here. Okay, we're going to take this, we're going to take a look at this, and I'm going to put back in the 6% interest rate on the 40-year loan. Take that out, 835. Okay, it's a maybe not. In most cases, maybe not. It's just it's you only drop it to $1,100. Okay, here. So you may want to take that lower interest rate if you're trying to modify, because your payment before is $1,199.10. The difference here is only about $99. So you may want to take the lower interest rate, but just so that you know, let me show you anyway what happens when you increase this at the same interest rate. Let me show you what happens. Look at this. Look at these principal payments. $100. You can attack this loan with $1,200 knock off a year and save a ton of interest. So just keep that in mind. Now, with the P.I.L.L method, we actually run all the numbers for you before you say yes to a modification. We run all the numbers and we figure out what can your budget stand? What do you need to do? So you could give us a call and we'll help you go through the modification process so you don't end up hurting yourself. So here is what we're talking about. So if we can get this going, let me get rid of this advertising. That kind of distracts me there. There we go. $835 is our new payment. You make that for 3 months, you're good to go. By the time things straighten out for you, you can start attacking this loan and knock it off in about 7 years. All right. You can knock this loan out in about 7 years. But let me show you what you need to understand when it comes to loan modification. Okay. Here's some information that we put together. All right. And let me see. We have if you want this, we have a link that we're going to post, and you can have this document that we put together. Okay, here at the P.I.L.L method. Mortgage modification scams are deceptive practices aimed at homeowners who are struggling to make their mortgage payments. People are taking advantage of individuals who are in trouble and are about to lose their home. I have talked to widows who have lost their husbands and they're trying to keep the family home. And these guys come along and try to scam them out of their homes. I'll show you what we mean here, okay? These scams can take various forms, often involving individuals or companies that falsely promise they can secure loan modifications, okay? They say they can fix things up with you with your bank. No, you can do it yourself. You can do it yourself. You may need a little bit of help, and that's what we're here to supply, okay? All right. Now, I want to get to one thing before you guys can get away from here. Some of you are going to have to leave early. All right. Any company that says I will guarantee that you'll be able to get a loan modification and charge you up front, that is against the law. I've been doing some reading on this. They can't charge you until they have produced the work they say they're going to produce. They have to come through. If they don't come through, you don't have to pay them. But never, ever, ever, ever pay them up front. Don't do it. Okay? We'll get into how you can read up on that. Okay? So where were we? Okay? These scams take various forms, often involving individuals or companies that falsely promise that they can secure loan modifications, lower monthly payments, or even save homes from foreclosure for a fee, typically charged up front. Here's a detailed look on how these scams operate, the warning signs to watch for, and how to protect yourself. You may want this information. You may want to share this with somebody else, but you can have this document and it will point you in the right direction. Okay. If you have any questions about this, we have a link for you here on YouTube. It's in the top of the comment section. Come in and we can have a conversation. You can start asking questions about this. Even if you're asking questions for someone else, come in, ask your questions. You may be helping someone else. How mortgage modification scams work. Okay. The phony counseling or phantom help. Okay. This is number one. Number one, phony counseling or phantom help. Scammers might pose as housing counselors. Okay. Or offer fake legal services. I mean, their documentation looks good. Their website looks good. They look official. They even look legal. And the language that they use may even sound legal, but it comes right up to the line of being illegal or making claims that they shouldn't make. It comes right up to the line, but they don't cross over. So it looks legal, it feels legal, and it feels like they can help you, especially when they're promising you they can save your home. Okay. Don't forget, call us at, let's go ahead and put that into 256 886 1867. 256 886 1867. Give us a call and we can help you. All right. And don't forget, you can also, our digital business card is ice10k.com. ice10k.com. All right. So there it is. The phone number is crawling across the screen. If you are in trouble, if you know someone who's in trouble, give us a call. We can help you navigate this. We are not a mortgage modification company. We can help guide you through the process, though. Okay. We can't get the work done for you, but we can guide you through the process to keep you from stepping on landmines, making the situation worse. Okay. So here we are. They might assist you. They may insist that you pay them a fee before they provide any assistance. Often these scammers will request that you pay hefty fees up front and then disappear without providing any real aid. I'm telling you, you can't. Let me scroll down here. Let me get to this part here. Let me see. Front fees. Okay. Oh, I need to get the information here where the government entities that can help you with this. Oh, I left it out of the. I'm going to have to get that for you in a little bit. Okay. All right. So there's government entities that, let me see here if I can find that. That's information that you definitely will need. Let me see if I can get that for you. Let me see here. Okay. Pulling it up now. And okay, let me see here. There we go. All right, modification scams. Okay. Protect yourself to protect yourself. Okay. Okay. Uh-oh. Did I lose it? All right. Let me see here. All right. Let's just do an online. All right. I'm going to just show you some of the things that we did to find out the information. All right. So let's take this off. Let's put this back on. Okay. All right. Okay. Let's see. Help with mortgage scams. All right. Help with mortgage scams. Okay. All right. So we can, there we go. Okay. There we go. Let's take a look at here. All right. So file a complaint about a mortgage company. And let me see I'm trying to find the government agencies that can help you with this. All right. One is the Consumer Financial Protection Bureau, the CFPB. CFPB, the Consumer Financial Protection Bureau. All right. They can help you. You can go on the website and get a lot of information there. Let me make this a little bigger so you guys can see it. Okay. All right. And there is let me see what other agency. Okay, Department of Housing and Urban Development, HUD. Okay, that's another government agency that can help. All right, the Department of Housing and Urban Development. And in your own state, you may want to contact your attorney general. I'm helping somebody right now do that. Contact your attorney general and make a formal complaint. And let me see here. Okay, there's one more. Let's see if we can find it. Okay, what can we do? Okay. Government. Okay, U.S. government. Okay, U.S. government. Let me see. All right. Let me see here. Okay, debt relief programs, stay away from that. Okay, government benefits, financial assistance, assistance for American families and workers. Let's see what's here. All right, economic compensation. All right. So if you just do some Googling, all right, you can get a lot of information. Federal financial assistance, grants, treasury assistance. There's a lot of information here that can help you. The Consumer Financial Protection Bureau, we already went over that one. Okay. And let's see. Okay. So, all right, let's get back to our other document here. All right. All right. So here's what we're talking about. Phony counseling and phantom help. These guys, so you do not want to pay up front. Don't pay up front. It's illegal. Bait and switch schemes. All right. That's number 2. In this scam, homeowners think they are signing documents for a new loan modification that will make their existing mortgage payments more manageable. Instead, they are actually signing over the title of their house to the fraudsters in exchange for a rescue loan. Oh my gosh. These folks are trying to take your house. Be very careful of that. Listen, it's happening right now. They say, we'll lend you the money to get out of trouble, but buried deep in the document, what you're doing is you're signing over your house to them. And if you don't pay them, they're going to kick you out of your house. So be careful of that. Be careful of that. Okay. Rent to buy schemes. Homeowners are tricked into signing over the title of their property with belief that they will be able to rent their home back with the option to buy it back over a few years. Let me tell you something. Every real estate investor I've ever talked to who said, I can help a person that's in trouble. I can buy their home. I can maybe take over their payments or whatever. All right. Whatever a real estate agent, a real estate investor comes in to help you out of a situation like this, they want to take over, and you have whatever money they give you, you need to move out of the house. If they're a legitimate real estate investor who says, I can help you here, I'll buy the house from you, or I'll take over your mortgage payments, all right, so that you don't go into foreclosure, so it doesn't ruin your credit. And they'll also help you and maybe even give you money to move out of the house. Never, ever, ever, ever will a real estate investor come in. It's just bad business. Come in and say, listen, let me help you out of a jam, and then let you stay in the house and further get into a jam with their money. When you have a situation like this and they're going to allow you to stay, here's what they're doing. It's called lending to own. Lending to own. They're hoping that you will not be able to pay so that they can take over the house and the equity that you have in it. You see, before this is done, they're going to find out how much you owe on the house, but they're also going to look at how much the house is worth. How much the house is worth and what you owe. The difference is the equity. And sometimes it could be $100,000, $200,000, $300,000 in equity. And that's why you don't want to move out of the house. You put so much into it. And so you're trying everything you know to keep it. And then there are others that are unscrupulous, and they'll come in and say, listen, look at all this equity. Let's give them a little bit of money. Let's give them an interest rate that they can't possibly deal with. And we could end up owning the home and the equity, and they'll turn around and sell that house and take all your equity right out of it. Ladies and gentlemen, be careful of this rent to buy schemes. A real estate investor that's worth their salt will find a way to help you to move out of the home so that they can help you financially. Okay? And that may be the way to go. But if they're talking about you staying in the home, don't touch that with a 10-foot pole. You better call us at 256-886-1867, 256-886-1867, so we can help you with if you're in trouble with your mortgage right now. All right. And let's see what we can do. Now, you probably won't be able to get into our P.I.L.L method program. But if there's a way, if you're already talking to your bank about modification, we can help walk you through the process so you don't feel so overwhelmed and you have somebody on your side. Okay? Helping you with this. All right. Here's another one. Let me see. Did we read all of this? Okay. Oh, scammers often charge very high rent payments, then evict the tenants, leaving the homeowners without their house and any equity they had. They're going to steal your equity. This is a steal your equity plan. Okay. So watch out for it. Fake government modification programs. Watch this one. This is number 4. Scammers may claim they are affiliated or with or endorsed by government programs that aid homeowners with loan modification, such as Home Affordable Modification Program, HAMP. They often use official logos and websites to deceive homeowners into paying for services that are actually available for free through government programs. So what they're offering is they've done some Googling like we did today, found these programs and built up a whole business model around it, selling you information that you can find yourself with a little searching. Okay? All right, watch this. Warnings of mortgage modification scams. Warnings of mortgage modification scams. Upfront fees. The major red flag is any service that requires you to pay fees before any work is done. In many countries, including the United States, is illegal for companies offering mortgage relief service to request payment before fulfilling their services. Never pay up front for any company that says we can save your house. We can get all these. They make you big promises. They'll they even may give a book of fake testimonies. Go to their website, fake testimonies, and then they'll charge you a fee to save your house. So you have $300,000 in equity, And they said, well, they'll take your last $5,000 out of the bank. He says, well, $5,000 will help save $300,000 in equity. That's a deal. If you have to pay up front, they're scammers. Don't touch it with a 10-foot pole. Okay. Okay. Here's something. Here's another warning sign. Guarantees. Be wary of anyone who guarantees they can help stop a foreclosure or get a loan modified. There are no guarantees. You just have to apply and see what happens. But we can put you in a, when you are applying and you can get approved for a loan modification, let us help you make sure that the terms are favorable to you. Now, even legitimate companies can put you in a position a little bit later that could be harmful to you, but with a little bit of help, you can get through this modification period okay until things get better for you financially, and we can guide you through the process. Okay? All right. Let me see here. All right. Legitimate housing counselors do not make such guarantees, and such guarantees and outcomes can often depend on several factors, including cooperation from lenders. All right. Instructions to stop paying your mortgage. Oh my gosh. Don't ever stop. Listen, people are telling you stop paying your mortgage and then you can qualify for a modification. Don't ever do that. Okay. Make sure you pay your mortgage payments. Don't ever stop paying your mortgage payments. And if you're in a position where you can't pay your mortgage, contact your mortgage company and get into a conversation. If you need a little help there, give us a call at 256-886-1867, and we can help make those calls with you. We just did this the other day. Okay. We found out some interesting things when we made a phone call with a potential client. Okay. We do have a consultation fee. We charged $150 for this. Okay. But when we got done, we got a lot of information. Let me tell you what we found out. The person was trying. So I said, let's call. And they said, my mortgage payment now is over $3,000 a month. When we first had the mortgage, it was $800 a month. Now it's over $3,000 a month. What's going on here? They saw one of our shows and gave us a call. Says, what can we do here? So I said, now here's what you do. I gave them some instructions and they call, but while they're on the phone, they gave me a call on a different phone, and I got to listen into the conversation and then guide them through what's happening. We were talking to the person and they said, listen, we want to know what amortization you're using to charge us $3,000 a month. We're talking to a person who says, now, and I said, now I want to talk to the manager. And they told her, you can't talk to the manager. All they're going to do is tell you the same thing that I'm telling you. And I said, insist on talking to the manager. And then we heard typing in the background, a keyboard in the background. Then I told this person, they're not the company. This is a answering service communicating with the company. So I said, now, here's what you tell them. I feel that you don't actually work for the company. You're an answering service. And you know what? That's exactly who they were. And they said, yeah, we handle the calls for them. And so they were pretending to answer her questions and get her to write a letter. I said, we don't want to write a letter. We don't want to write letters. We want to talk to somebody who can explain to us what amortization schedule you're using that went from $800 a month to $3,000 a month. Okay. And I said, now, here are a couple of things that could happen while they're trying to get somebody on the phone for you to talk to. Okay. They may get somebody, and we'll talk to them, and I'll show you what to say to them. But what generally happens, they keep you on the phone for 20 minutes, for a half hour, for 45 minutes, and then they accidentally drop the call. Accidentally drop the call. So that means if you call back, that means you're going to be on the phone again for another half hour, another 45 minutes, maybe even an hour before you actually get to talk to somebody. And guess what? They'll accidentally drop the call again. That's when you call the attorney general and start complaining, because some of these practices that they're doing are illegal, but most people don't know. And maybe they're a little ashamed that they got into this situation in the first place. So they don't want to call the attorney general. You better call the attorney general and say, listen, I need help and they're not talking to me. And make sure that you get a notebook, get as many names as you can, get as many phone numbers as you can, get addresses if you can. All right. Get all that documentation before you start talking. And when they start trying to ask you questions, say, listen, I'm not answering any questions. I'm just calling you to ask questions. One more time. I'm not answering questions. I'm calling to ask questions. Okay. So what they'll do is they'll make you feel like when they're asking you questions and you give them answers, they make you feel like you're getting closer to a resolution, and they'll set up an appointment for you a week later, or they'll say somebody will call you. Now that we have this information, somebody will call you, somebody will email you, somebody will send you a letter, and they want to get you off the phone so that you can wait a week and maybe forget, and then nothing's happening, and you call back frustrated and even more panicked. Okay, so don't fall for that one either. So here's what happened. After about 20 minutes, after about 35 minutes, we actually got to talk to somebody who was there, who had their mortgage. And I asked them, so I said, listen, ask them this: are you a mortgage company? And they said, and if you are, who did you buy the mortgage from? Who did you get this mortgage from? How did you acquire the mortgage? And guess what? They weren't a mortgage company. They were a company that accepts payments for mortgage, for the mortgage lien holder. I said, can you tell us who holds the lien on this house now? Who holds the note? Who holds it? Who holds the note on the house now? And they said they couldn't tell us, but they would look for that. I said, now we're looking at, I said, now what was the amortization schedule? How was this thing, show us the calculations. Somebody explained to us how this went from $800 to $3,000 a month. Okay. So we got more information. And I said, before we even started talking to this new person, we got the person's name, we got the person's phone number, we got the person's extension, and we got the address of the business. Now, they're going to give you, they said, well, let me give you this address. No, we want the address where you're physically working. Where do you work? And they said, well, we're in Salt Lake City, Utah. We want that address. No other address. We want the address where you're physically working. So we got all of that information. That's all documented. This is all going to be turned over to their attorney general. Through reading through the document, and we found out that that this person was in a temporary situation. They've gotten a modification before, and there was a temporary situation where they could pay interest only for 5 years. What does that mean? They paid interest only on the mortgage for 5 years, which means they lowered their payment, paying interest only. No money went to principal during that time. No money went to principal. Their loan was not paid down by a single dime in that whole time because they had an interest only payment. Okay. And then by reading through the document, this guy read the document, start reading it, and it says, at the end of the modification period, then you will your payments will go to a very low 1.25% a month interest rate. 1.25% a month interest rate. All right. So I said, wait a minute. Okay. Now, if you're not familiar with how this works, let me show you. I've got my calculator on the screen. We're looking at 1.25, okay, percent a month. Okay, 1.25% a month. Okay. And so if that's a month, then there's 12 months in a year times 12. There it is. 15% interest rate. 15% interest rate. They signed a document to try to save their home. And in there, their interest rate was legally represented as 1.25% a month. Now, if I'm trying to save my home, I will read that and I'm thinking, because it's a modification situation, I'm going to get a 1.25% interest rate. Yes, it is 1.25%, but it's 1.25% a month. And so when we got that, I said, you just signed up for a 1.25% interest rate. So we want all the documentation. So we got them to send, they wanted to try to give this person a way to go onto the website and pull off the information off the website. Tell them you're not good on a computer. You want hard copies mailed to you. And you got the person's name, you got their phone number, you got their extension, you know where they are, and we're going to turn and let them know you're going to turn all of this over to the attorney general in your state. Now, the person who's working there works for the company that collects the money. They are not the company that you're paying. They don't hold the mortgage. They just collect the money for the mortgage lender so that the mortgage person can stay isolated. So here is the level of isolation. First, we talked to the answering service, and they sounded very official at first until I heard the typing. And then no. They're communicating with somebody. They're an answering service. So then they finally got somebody on the phone who could help answer some questions, who had the documentation, but at that time could not tell us who owned the mortgage now. They could not or would not. But so we got this information on who they were, and then the person who has the mortgage now was isolated from that person as well. So there's this level, and then the person who actually the company that actually owns the mortgage, all right, who owns the note. And so now we're getting information together so that we can give it over to the attorney general, and then the attorney general can go to work, because there's a lot of stuff that's illegal in this whole transaction. And folks, here's what they're hoping to do. There's only a little bit of money left on this mortgage. And now they're trying to charge $3,000, over $3,000 a month for that. Guess what's going to happen? They won't be able to pay it. They're going to get an eviction notice. And then the person who says, "Oh, they only owe a little bit on this house, but look, we're going to grab up all the equity." No, that's not going to happen today. That's not going to happen today. The person is now in the hands of their state attorney general, and hopefully they'll get this all straightened out. But these kinds of things happen all the time. Okay? Listen, I need you to subscribe to the P.I.L.L method. Subscribe to the P.I.L.L method and find out what we can do. I'm going to show you some math. If you already have a 40-year mortgage, if you have a 40-year mortgage, how would you like to know how that you can deal with this? Okay, I'm going to get into that in just a little bit. Let's get through this part here. All right. Okay, you already know instructions to stop paying your mortgage. That's not the way to go. Request to transfer property title. No legitimate loan modification service will require you to transfer your property title to third parties. This is a clear sign of a scam. They're not trying to help you. They're trying to kick you out of your house. Okay? Don't do it. High pressure sales tactics. Scammers often use pressure tactics to scare homeowners into acting immediately. They might claim you could lose your home if you don't act fast, pushing you into signing paperwork without giving you time to review it. Listen, call us. We'll help you. 256-886-1867. Call us. We'll help you. How to protect yourself. Verify credentials. Always check that any housing counselor or legal assistance you seek is accredited and licensed. For instance, in the U.S., you can verify counselors through the Department of Housing and Urban Development, HUD. Okay? You can call them. You can contact them. Avoid upfront fees. Steer clear of services that require you to pay before assisting you. Instead, seek help from recognized agencies that offer services for free. Okay? We can help you to find those. Research the company before engaging with any service. Before engaging with any service, do thorough research. Take your time. Take your time. It feels urgent, but take your time. Okay? Get them checked out. Check reviews, complaints with the consumer protection agencies and the Better Business Bureau. Check the people out. Even check the P.I.L.L method out with the Better Business Bureau. I mean, you want to check everyone, even us. Check us out too. All right. Contact your lender directly. And this is what we were saying before. If you can we were trying to contact the lender, but we couldn't find out who the lender was anymore. So we'll eventually get there. Okay. We'll eventually get there, but we got enough information to get the process started. Contact your lender directly. If you're facing payment issues, your first step should be to contact your lender. Most banks have programs to help consumers facing financial difficulties. I think let's stay here for just a second. Because of people being embarrassed, because of people being scared, they think by contacting their lender that it's going to make things worse. 99% of the time, by contacting the lender and finding out what programs are available, you can avoid a lot of this junk. You can avoid a lot of it. But when they come up with a plan to help you, there are different variables in a plan from a bank or mortgage companies. Some are better suited to your situation than others. We can help you choose the right plan for you. And watch this. We'll do it so that it costs you less over time, so that when you get out of this situation, you're better positioned to own your home free and clear. Okay? So let's not put yourself in a deeper hole by getting terms in your modification that will end up hurting you. Let's get the best terms available for you when you're getting your modification, and the P.I.L.L method can help you, okay, with that. All right. And let's see, what else did we do? Not only connect with your attorney general, but if you can afford it, get some direct legal advice. Okay. Maybe you can go to legal aid, or, but listen, at least pay the consultation fee to talk to a lawyer that specializes in real estate situations. Not all lawyers are created equal. Find a lawyer that will help you understand what's going on, that's good, that specializes in real estate, mortgages, foreclosures. All right, get somebody that can help you through that, and then ask them what experience do you have in real estate? Okay, because I'm telling you, if they're a tax lawyer, they most likely can't help you. They're good at taxes. They can save you money on your taxes. Okay, they may be an estate planning lawyer. They may be good at that, but that doesn't mean that they can help you. A trial lawyer can't help you in the situation because their expertise is trials. It's not real estate. Okay, so find a lawyer that specializes in what you need. Okay, get legal advice. If considering any form of property transfer or a major financial decision affecting your home, especially if there's a contract involved, get a lawyer to help you with it. Seek independent legal advice. Make sure any legal help you receive is from a licensed attorney. And even with when you do business with the P.I.L.L method, did you know that we give you 3 days to go over the documentation with your lawyer? We have to. It's by law. And we have to tell you that up front. By law, here's the paperwork. Here's what we're going to do for you. Take it and you can read over it. Take it to your attorney. You have 3 business days to go over this, or you can cancel the contract. Okay. Within that 3 days, you can cancel for no reason at all. And I don't feel comfortable. Even legitimate companies have to do that. Okay. Even legitimate companies have to do it. And they have to tell you up front and give you paperwork, give it to you in writing. P.I.L.L method does that. We do all of that. Okay. All right. Here's the last thing. Understanding these scams and knowing the red flags can help homeowners avoid falling victim to these deceptive practices and find legitimate help when struggling with their mortgages. Always approach mortgage modification with caution and arm yourself with information from reliable sources. You can have this. We're going to put the link to this one more time. If somebody who's just coming on wants the link to this document, we're going to put it in the comment section right now. And we're going to take a little break right now. We're going to hear from Dr. Eric Thomas. And then when I come back, I'm going to show you, if you have a 40-year mortgage, or if you are thinking about getting a modification, I'm going to show you how a 40-year mortgage can actually help you. Okay? All right. Let's hear from Dr. Eric Thomas. We'll be back in a few seconds.
Listen to me, y'all. But one of his mentees took us through one of their programs, and I paid off my mortgage. But guess what happened? My marriage went to a whole nother level. And you know why? Because my wife is a security freak. And even when I blew up, my wife would be like, oh, you blew up, but how long is you gonna keep making this kind of money? I was like, I don't know, forever. She's like, you sure? Because I'm gonna keep my license as a nurse just in case you don't. So when I paid the house off, my boy was like, you ain't gotta do that, you can do this. But when I paid the house off using that program, it took the stress level all the way down from my wife because we no longer had a mortgage. Does that make sense? That thing that was coming every month, that was getting on her nerves, we didn't have that no more. And so she was at rest.
Okay, folks, let's do it. Let's take a look. We're going to take a look at some mortgage information here and see how we can understand how mortgages actually work. Now, right now, there are a slew of advertisements on Facebook, on Twitter, on TikTok, on how people can pay off their mortgages in 5 to 7 years. Okay, they're using a HELOC in first position. What does that mean? And I'll tell you, it's a dangerous game when you put your mortgage in a HELOC. Listen, it does work. It can work. But give us a call and we'll walk you through it and we'll show you what you're not being told. You're being told that you can pay off your mortgage in 5 to 7 years by putting your mortgage in a first position HELOC. You're getting it refied, and it's a home equity line of credit. All right. And because it's a home equity line of credit, the interest cost can be easily manipulated so you pay a lot less interest, and that your money sitting in the bank, whether it's sitting in your checking account or savings account, can offset interest costs by taking your income, putting it into the HELOC, lowering how much you pay, how much you owe, therefore lowering how much interest you will pay that month as you pay your bills from the HELOC. Okay? Here's what happens. And you listen, this program did not start in the United States. It's not new. It's been in Australia for years. You know how many people call us from Australia? And you know what the main problem is with using a HELOC like this? Is there are no guardrails. There are no guardrails. Meaning, how much do you borrow? Okay, if you got your house in a HELOC, your mortgage payment is in a HELOC, all right, and you have it's worth $280,000, but your house is worth $300,000, but you owe $250,000. Okay, so now that's your situation. All right, you got a $250,000 HELOC. All right, and you got about $30,000 worth of room there because you got $280,000, but you owe $250,000. So that's $30,000 of room that you have there that you can borrow additionally. Here's what tends to happen. If you use this HELOC system and you put your income into the HELOC, that means, let's say your payment is $5,000 a month. You're putting in your you're putting in your whole $5,000 to $7,000 a month into the HELOC and paying your bills from there. You lower how much you owe by a whole $7,000 when you do that. And that month you'll pay significantly less interest because you put that $7,000 in. But Don, I need to pay my bills. Well, you pay your bills from there too. Okay. But what happens when the hot water heater blows up or you need to pay a deductible on your roof? I got 30 grand here that in my HELOC. Do they start chipping away at borrowing that money and thinking, well, I'll pay it back next month. I'll pay it back next month. I'll pay it back next month. I get so many calls that we started out with a HELOC, a home equity line of credit that had a limit of $280,000. We owe $250,000, but before they know it, they owe the whole $280,000. They're in worse shape now than they were before because there are no guardrails. There's nothing that says this is how much you can borrow. This is how easily you can pay it back. With the P.I.L.L method, we give you precise instructions on what to do and when And when you do this, no HELOC system like this that they're talking about in first position can tell you exactly how much interest you're saving per month. If you don't know how much interest you're saving, how can you ever optimize interest savings if you don't know what the baseline is? They're not giving you all the information. You're signing up for a program and they're not giving you what you need. So go to ice10k.com. Go to ice10k.com and you can start the process. Here, let me pull this over here. Okay. ice10k.com right here, ice10k.com. And when you go there, you can get a savings and earnings report and start this process. Scroll down underneath ET's picture here and click on Get a Savings and Earnings Report. It's free. Even if you're in trouble, if you're not in trouble, if things kind of look dicey, but maybe things are looking great, and you just are tired of paying all of that interest to the bank, to the credit card companies, to your student loans, listen, you need to have proper education on how loans actually work, the strategies on how to beat the bank at their own game, and the technology that can beat the bank's computers. Our computers are designed to make sure when you move your money, you're going to pay the least amount of money that's mathematically possible. There are other programs out there that will tell you, yes, you can save interest. It's true. We can save you time. It's true. They're just not telling you how much. Why would anybody see? Because we're not taught this at a young age. We just think that anything that I can do to save money on my mortgage, my student loans, or my credit cards, or my car loan, anything that I can do is as good as any other thing that I can do. It's not true. There's a way that you can know you're saving the absolute most your family can save, and then paying off that debt as quickly as you possibly can with the money that you have. And you don't need more money. You don't need to sacrifice lifestyle. What you need is to pay less interest. And with the P.I.L.L method, we will guarantee with our opportunity cost calculator that you will pay the least amount of interest that's mathematically possible. Okay. You can even check out our website at pillmethod.com. Don't forget about that. But go to ice10k.com, get your savings and earnings report, know the month, day, and year you'll be debt free, and how much interest you can save. It's about time that people started telling the truth about this situation. And listen, I'm seeing it happen more and more. There are people out there that are saying we can do the same thing the P.I.L.L method is doing. Okay. And they're trying to ride our coattails. But what they're not offering coaching. They're not offering customer service, and they're not telling you exactly how much money to move, what month to move it in, what day of the month to move it on, and which loan to attack. And at that point, they're not telling you how much interest you just saved when you make even one move. If they can't show you the numbers when you pay one prepayment, if they can't show you how much interest you're saving, if they can't tell you how you're optimizing your interest savings or saving the most you possibly can, don't touch them with a 10-foot pole. In fact, you can give us a call and we'll let you compare our program with their program for free. What did I just say? You can compare the P.I.L.L method program with anybody else's program and we'll let you do it for free. Okay? You can try before you buy. We'll show you and prove it to you that this company is superior than all others on the planet. We guarantee our results. Oh, that's a big thing. They won't guarantee your results. We will. We'll put it in writing. If we tell you, we give you a savings and earnings report and tell you you're going to be out of debt in 7.5 years and you're going to save $200,000 in interest. If you follow our program, you'll do exactly that or better. Most people do a lot better than what we're telling them. Okay. So you'll either do that or better, or you don't pay us. We will guarantee your results. We're the only company that does this. And our guarantee is not for 1 year. It's not for 5 years. It's not for 10 years. Our guarantee is for life, not on just this mortgage, but on the next one and the next one and the next one. People who work with us can pay off their home in about 5 to 7 years. They'll put a renter in that house and get another one. Do you know that even though you didn't have the cost that house when you signed up with us, we have to guarantee your results on that one too? Yeah, we'll plug it in, and the results that you see, we have to match those results. And guess how much you pay us for adding on the second, the third, the fourth, or the fifth house? Not a single dime. You pay us once for life. All these other companies, you have to keep paying them. I'm just saying, find out for sure, folks. Find out right now. Get your savings and earnings report. Stay out of trouble. Stay away from the modification. You won't need it, okay? But in case you do, we're going to show you what happens if you have a 40-year amortization. It's crazy what you can do. All right? Let's pull this up. Okay? I have $200,000 mortgage here at 6%. Let's just say that we are into this thing for 5 years. Okay, you've been in mortgage for 5 years, and let me see here. 200,000 at 6%. Yeah. Okay, there we go. Okay, 60 months. You're paid this loan down by $13,891.20. That's how much went to principal. And you've given the bank already $58,000. And now you have to modify this loan. Okay. So now you owe $186,108.80. So we're going to copy that. We're going to put it in. We're going to duplicate this tab. We're going to put it in amortization schedule. This is how much we owe. And if you're using Brett Whistle, okay, if you're using Brett Whistle, remember, if you're copying and pasting, remove that comma because it won't work in there. So now we're going to get to lower this payment. We're going to get a new. We've been in this for 5 years, okay? And now to lower the payment so that you can master this thing, we're going to now take you all the way back up to 480 payments. A 40-year mortgage, because of the we needed to get the loan modified. Here is the new payment, $1,199.10. It goes down to $1,024, and you say, that's not enough, and we're going to go back and see if we can get a better interest rate. Let's see if we can knock that, because it's getting modified. Let's say we can get that down to 4. Okay. Here's our new payment, $777.82. You must make 3 successful mortgage payments, and then your modification goes into full effect. Here's your new payment, but it's a 40-year loan. Okay. Now, in this loan, after in your new loan, let's say you don't know the P.I.L.L method yet. Okay. You're in your new loan, and you go down 5 years. You just paid it down by another $10,000, and you just paid $36,000 in interest. Let me show you what happens when you learn how to read an amortization schedule, and you have this new loan that is 40 years. Watch this. Things are getting better, and take a look at your principal payments here. When you make your very first payment, $157.46 goes to principal. $620.36 goes to interest. That's what's happening. The next month, $157.98 goes to principal, and $619.84. A little more money goes to principal, a little less money goes to interest. But look at the tiny principal payments. Look at the tiny principal payments because of the 40-year loan. Oh my gosh. Do you know what damage you could do to a loan once you understand that you control the loan with the principal payments and interest payments you skip don't matter? It only takes, once you make this payment here, it only takes another $157.98 to eliminate $619.84 in interest you never have to pay. And your next mortgage payment is actually on line 3 of the amortization schedule. You got rid of line 2 for only $157.98. Man, oh man, do you see what happens? You don't have to keep a 40-year loan for 40 years. Even if it's for 45 years. I've seen them at 45 years. Listen, give me a 40 or a 45. I wish I could get it from the beginning. You can't get these loans unless it's modified. So listen, don't seek to get a 40 or a 45, but man, with the way home prices are now, it is predicted that you'll be able to soon get 40-year mortgages in the US. It's predicted because if homes prices continue to rise, we're going to have to get 40-year mortgages just to get us a decent payment. But because of that 40-year, you can still pay it off in 5 to 7 years. Let me show you what happens here. Let's take a look at cumulative principal and cumulative interest. After 1 year, if you add up all these principal payments, look at this, $1,924.53. That's what you paid the loan down for in 12 months. And it's $7,400 in interest. If you can pay this $1,900, now I'm just giving you the idea of how this works. Our program is very specific in what you do. Okay. I'm just showing you that it can work. I'm not showing you what to do. Do you know how many people watch these videos? And we spend most of our time just talking about what happens when you prepay, understanding prepayment of principal, and they think this is the P.I.L.L method. No, there's a lot more to this. Okay. There's a lot more to this. Listen, I bet you can go online right now. I bet you can go online right now and find a video on a dental hygienist cleaning teeth. I bet you could go online right now and find it. How many videos would you have to watch and you could be certified to become a dental hygienist? Can you watch enough videos on YouTube to become a dental hygienist? I talked to a dentist yesterday, and it says, he says, you can't become a dentist by watching YouTube videos. You can't become a lawyer or a mortgage professional by watching YouTube videos. You can't do it. So how is it that we can think we can watch my videos that explain the basics and think I've got the P.I.L.L method down? No, give us a call. We'll show you what else is involved. All right. There's just way too much to get into in an hour and a half show. But let's get into this. Besides, all of our services are guaranteed. There's no way a person gets hurt with the P.I.L.L method. People are afraid of getting scammed. I understand that. And this is why we have things in place. Number one, you can try before you buy. Number two, we guarantee your results, or we have to pay you your money back and we put it in writing. Number three, we have customer service 8 hours a day, 5 days a week, and we provide you with a coach. So you got support all the way through. No other company in the world is doing this. We're the only ones. And we're going to make sure you are successful. If you can't be successful on our program, we won't allow you to sign up. we'll give you some advice on how to get ready for our program. But if you can't be successful, you can't get into the program because we have to guarantee your results. So there's that. Watch this, folks. $1,924.53. What if we had that? Instead of giving it to the bank in 12 monthly installments, what if we had it, we can give it to them in one installment, right on line one? We're paid. They would have to subtract this from the $200,000 that we owe, and we would end up with 184. Oh, this was a new loan. It's not 200,000. It's 186,108. Okay, 186,108. We give the bank this much money up front. We're paid down to here in 1 month, and we skip all the interest payments between line 2 and line 12. Instead of giving the bank $7,409.31 to pay it down to here, we're paid down to here in 1 month, and the interest cost is what we pay on line 1, only $620.36 to pay your loan down to here. So if you're not giving the bank all that money in interest, does that mean you have more money that you can put towards principal? How this works is when you choose, we help you to choose when to pay your mortgage, when to give the bank, when to give the bank money, which makes it impossible for them to charge you interest. We give you that information so that you don't have to give the bank all of that money. So let me pull something else up here while we're doing that. Okay. So watch this. Once you're doing this, what takes you 3-4 months to save up some money again to put on principal? You can knock every 3 to 4 months. We're going to tell you how to put money away. We're going to watch your budget for you. You're going to tell us how much money you're making, how much money you're spending, and our program will take whatever differences there are. Let's say your electricity bill is a little bit more this month, or it's a little bit less. Do you know that's going to affect how much money you have available to put on debt the next time around? Yeah. Here it is. Here's the opportunity cost calculator. Here's what's going to do it for you. Here's what's going to keep you out of trouble if you get into trouble. It's going to keep you out of trouble. And if you should get into trouble, this is what's going to get you out. Managing your finances so that you know exactly how much to put on debt, how much you're spending each month, and any money that's left over can go towards your savings account. When your savings account gets to a certain point, this program with this green and blue arrows will say, let's take money out of the savings account. Let's attack this MasterCard, and we will calculate for you how much interest you are saving. $1,935 in interest in this case. And then we start the process all over again, and the program will choose which loan to attack next. It is an amazing system. It takes all the guesswork out. It is so much better than having a HELOC. All right. Now, what if you already have a HELOC? What if you're in the HELOC situation? Okay. So let us pull up. All right. Hold on. We built so much into this thing. So let's go ahead and click on settings here. What is going on here? What's going on with mine? All right, settings. All right, there we go. And we're going to reset the account. There we are. And let's do this one. Okay. and reset John and Rebecca Jones. And we're going to take a look at what happens here. So John and Rebecca Jones they decided that they were going to get a HELOC, but yeah, we started out with the HELOC program, but we wanted to use the P.I.L.L method instead. So what options do we give you if you already have a HELOC? So we have a mortgage of $200,000 at 6%. We have a HELOC here at 8.6%. We owe $3,500 on it. We have a available to us $56,500. Okay, and we got a Visa with $2,000 on it. We got an auto loan of $25,000. Let me show you something here. Let's go into preferences. And this is why people choose not to use the HELOC system, because when we do the math, here's the line of credit system here. Using the line of credit, it's going to take 9.5 years to get out of debt. Let me show you how much interest they're saving. It's $164,960. 9.5 years to get out of all that debt. And then here's how much interest they have remaining. 72,000. I'm going to write that down. 72,000. This is how much interest they have left to pay. 563. So not only do we tell you when you're going to be out of debt, not only do we show you how much interest you're going to save, we also can show you how much interest you have left to pay. Okay? So they can switch it over. That's the line of credit method. Let's switch it over to, let's go. Let me make a note here. Years to pay off, 9.5. All right. Interest remaining. Okay. So that is, and we're at 9.5. So let's switch it over to just the savings, the checking and savings method, which means this. We'll track your income, we'll track your expenses, and then any money that's left over, the program will say, take that money and put it into your savings account, save it up. And then the program will say, out of the money that you have saved, we're going to borrow that money instead of borrowing the money from the HELOC. Borrow that money from yourself out of your savings account and dump lump sums on your mortgage or student loan or credit cards or whatever the program says this is going to be the best way to handle it. Do that, and then it will start saving up the money again. The program will tell you, save up the money. When it gets to a certain point again, take that money and put it on the debt so that you can save the maximum amount of money in interest per dollar applied. So let's switch this over to, we see it's 9.5 years to pay off. Here, it's 9.4 years to pay off if we use the checking and savings method. Let's see what happens to the interest remaining. We're down to $71,647. If we use the checking and savings method, ladies and gentlemen, we can actually save more money in interest because we're moving exact amounts. Okay. Why then are people talking about the HELOC method so much? Okay. It's a strategy that can work. But if you don't know the numbers involved, it can take you longer to get out of debt and cost you more money. And plus, you don't know exactly how much to pay and when to pay it. This way, you don't have to. See, the reason why the HELOC method is almost the same as the checking and savings method is because you can take money from the HELOC and put it on the mortgage right away. With the checking and savings method, you have to save up the money first and then put it on the mortgage. That's the only difference here. But that's the only difference in the HELOC and the checking and savings method. The really big difference is this. Let's go back to the action plan. John and Rebecca Jones get paid. The money numbers in the green are when they get paid. They pay bills, and then the program says, oh, we need to take money from your checking account and put it in the savings account right here. This $855.83 that the program is directing John and Rebecca Jones to put into their savings account will stay there until it's time to pull out the right amount to put on the debt. $855.83. This is money they don't need for anything else because all of their bills are in here. So when we scroll down, we're saying, oh, we got to put additional money in savings. We're just making minimum payments to the debt here, ladies and gentlemen, making minimum payments to the debt. And look here. Oh, and then the program says, now we're going to take some of that money that we've saved up and put it on the debt. $2,005.79. Let me take you through 3 months. Okay, this is how easy it is. We're going to select the entire month of February. So I'm not going to click on these individually. We're going to execute the entire month of February and pay all the bills, get all the income. February is gone. Okay. Now we're going to go through March, do the same thing, get our income, pay the phone bill, pay the mortgage, pay the minimum payment on the HELOC, save money. We're going to go through all and pay bills. We're going to go through all of this at one time. Okay. Select. All right. Execute multiples and execute. Okay. Now look here. We're paying off, we're putting minimums on the debt. And now we're down to, we're going to put money on the mortgage. On the Visa here. Okay. Let me show you what's happening in the accounts. Right now, they have $617.57 in checking. They have $6,768.25 in their savings account. Let me show you something else that's quite interesting. We're going to hit preferences. And I want to show you this. They're keeping $5,138.89 in their savings account at all times. We're not using up all their cash. The program will follow your direction. And in this case, they want to keep $5,000 in their savings at all times. So any monies that we're putting on debt has to be over and above this amount. Okay? So we're not cash poor. So let's go back to action plan. Let's take it down to, we're going to just click on these individual things here, all the way down to where we're paying the mortgage, paying other bills, we're getting all our income in, buying our food, doing all right, moving money over to savings, and then taking money and then paying on the Visa. So let me show you what happens when we do that. So we're going to execute multiples down to paying off the Visa. All right. Execute all of that. And right here, we find out that we actually saved $2,063 in interest that we'll never have to pay the bank. Okay. We just paid off the Visa all at once. And now we're going to start saving money again. And we can tell when the program wants to put money on debt again. It will be July 15, 2024. And the program is predicting that John and Rebecca Jones will be able to save up $3,150 additional monies to put on debt at that time. It's a process of saving exact numbers, exact timing, the exact day of the month to put the money on, and which loan to attack. And then the program starts to save up again. And in these months, in May, in June, and part of July, because we can only see 3 months at a time, we're just making minimum payments on the debt. The program tells you when to put extra on the mortgage or whatever loan it chooses. So let me show you how that works. We're going to go over to preferences. We're going to click on program focus settings, and the program is set to automatic. The program will choose when to put the money on the debt and when, how much and when, and which debt. The program does all of that for you from now on. You just follow the guide, and it is that simple. And if you ever need help, you give us a call and we'll help you. So folks, that's going to be it for today. I hope this information has been helpful to you. Don't forget to get your link to the information that we had so that you can give it to your friends so that they can, if they're in trouble, if they need a modification or if they've gotten a modification, give us a call and we can help. But that document that we put together will kind of guide you as to what to look for. Stay away from the scams. Stay away from the scams. All right. So anyway, tomorrow, I'm sorry, on Sunday show, you're going to really love this. Let's just say you've been watching what's been going on and you want to get a cash offer for your house. We're going to show you how homeowners, if you want, you can get cash offers for your house. We're going to show you how to set it up so that your house will be irresistible to a segment of real estate, and that's called wholesaling. You can become a wholesale. We can show you how to manage. Thank you, Ken. All right. Ken says, thank you. That's Ken Russell watching us on LinkedIn. Thank you, Ken, for saying that. We appreciate you. Okay. Ken is in Canada. All right. So on Sunday, how would you like to learn how to negotiate with a wholesaler from people who wholesale for a living? How would you like to contract them? Let's say you got a wholesaler that's contacting you. All right. You want to navigate how to deal with a wholesaler so that you can get the best price possible for your house. And there are times when putting your house on the wholesale market can actually make you almost as much money and sometimes more than putting it on the MLS, hiring a real estate agent and paying all those fees. So you can learn how to deal with a wholesaler, and that will show you some tips and some tricks on how you can increase the amount of money you can take home and with a cash offer and close within about 30 days. Boom. I think you're going to like Sunday show. Can we put that up on the screen one more time? All right, folks. Cash off. Homeowners, get cash offers for your house. That's going to be fantastic. I'm looking forward to seeing you on Sunday. We're going to be out of here for now. But folks, remember, get your savings and earnings report. It's free. Go to ice10k.com, ice10k.com, get a savings report. I also need your help in getting this information out. Become an affiliate, and we'll pay you. Become an affiliate. Go to ice10k.com and click on Become an Affiliate. And you can make between $300 and $3,000 a month as an affiliate for the P.I.L.L method. All right. Also, get my book and start teaching your children, your grandchildren, your nieces and your nephews. Listen, they can understand this information at a basic level. All right. So teach them. You can get my book today. Go to ice10k.com and click the link, buy the book, and then you'll be able to do that as well. So we've got a lot of good. Ken says, make me an affiliate. Yes, you can do that, Ken. Go to ice10k.com. Here's how you do this. All right. I'm going to do this right now. All right. Pull this up, ice10k.com. All right. And it takes about 15 seconds, Ken. It's right here. All right. Let me move this out of the way. Okay. It's right here. Become an affiliate. And your name, first and last name, your phone number, your email address, and tell us how you want to get paid. Cash App, Zelle, Venmo, PayPal. It is that easy. Fill that out, and then we'll talk about how, and we'll send you out a letter within a week or so on an email as to what to do and how to do it. And all you're doing is directing people to watch our YouTube videos. Follow up with them within 48 hours. See if they want more information. If they do, then you go back to ice10k.com, our business card. Scroll down underneath my picture now. So there's my picture. It's when I had some hair. Scroll down and click on refer a friend. And then you fill that out. Put in their name, their phone number, their email, their zip code, or in your case, postal code. Ken, put in their postal code. Put in your phone number, your name and phone number, so we know who to pay. And then give us some information about them. When is the best time to call? How you know them, especially if they've watched the videos. Please do not send us anybody who has not watched the videos, please, because all we're going to do is send them to the videos. Okay, we only want to talk to people who've already watched the videos on YouTube and they want more information. Okay, they see that this is a viable situation for them because they spent the time watching the videos. All right, then send it off to us and we'll take care of it. And once they become a client, we pay you. If you send us 5 clients in the same month, okay, that's a total of $3,000 in commissions we have to pay out. All right. And if you send us a 6th one in the same month, we'll add another $1,200 to it. So, and Ken, it's $3,000 US, not Canadian. All right. So you guys can do the math on that. All right. So that's it for now, ladies and gentlemen. So we're going to be out of here. Happy Sabbath to all of you. Don't call me tomorrow because tomorrow I'm going to be in church, but we'll be right back here on Sunday, talking to you how you can get cash offers on your home. Have a great rest of your day, everybody. See you on Sunday. How many want to know how to pay off all of your debt in an average of 7 to 9 years? You can do all of this without refinancing, without change to your budget, without sacrificing lifestyle.
Me and my husband do the P.I.L.L method, and last year we were able to pay down $33,000 on our mortgage without feeling like we were poor. We still did tons of entertaining things and enjoyed our family.
You don't have to eat beans and rice every day. You don't have to cut up your credit cards. You don't have to drive a 30-year-old car. You don't have to sell pizzas at night to pay off your mortgage. All you need to do is pay the bank less interest. That's what we're talking about today. Here is what P.I.L.L method stands for: prepayment of principal, isolation of principal amounts, leverage, and liquidity. You understand it? You have a way of getting out of debt more efficiently. The interest rate you're quoted is not the interest rate you pay. You think you're buying a $500,000 home. The true cost of that home is what? $758,000. Total interest paid as a percentage of principal, 51.777%. That's what's going on with this loan. The ability to read and defeat an amortization schedule is not taught at any level of financial education. I need you to understand the power of a penny. You will not hear what I'm talking about from Dave Ramsey. Do you know why? Because I own the copyright. I literally wrote the book.
But Don has some valuable information that can contribute to the quality of a person's life. And it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.